Make sure you guys get your 5 stocks from Moomoo. Link down below. Deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. Literally free money, guys. Link down below. And now let's talk about this stock that is down 60% from all-time highs. And just today, when I'm filming this video, the stock is down another 10%. So in this video, we have to look at the chart of this stock, which you guys can see on the screen right now. It's no secret. And we have to break down financials, some numbers, different metrics, and we're going to look at the most recent earnings presentation. So hit the like button, subscribe, let me know your thoughts down below in the comments, and now let's get into it. And the stock, again, it's no secret. It's right on the screen right here. The stock is Shopify, ticker symbol SHOP. This stock today is down 75 bucks, down 10%, and the all-time high, which we were just at back in the middle of November, was 1762. So we are down from 1762 down to 670 bucks roughly, which means this stock is down over $1,000 a share, down over 60% as of today from that high. So we have to break down what's going on with Shopify, why is the stock going down, in my opinion, and we might as well talk about that now. Shopify was in that group of stocks that did very well during the pandemic. It flourished during the pandemic. A lot of people were shopping online, e-commerce, right? And people are still shopping online. E-commerce is going nowhere, but it really accelerated during the pandemic, which helped companies like the Shopifys of the world, Amazon, pretty much any online retailer. I don't want to generalize here, but a lot of them did very well, and Shopify was in that bunch. So if you guys take a look at this 3-year chart, this stock exploded. Heading into 2020, it was right around $300. I mean, in October 2019, November 2019, January 2020, this stock was right around $400. I mean, it was under $300 just shortly before that. And then once the pandemic hit, this thing went from $390, $350, let's put it as a round number, back in March 2020, and then it ran all the way to $1760. So we're talking in a year and a half, this stock went up 500%, 400%, something like that. So it did very well. The business did very well, but the valuation got way too stretched. And a lot of these pandemic-oriented stocks, it happened with those as well. We're not going to get into those, but, the DocuSigns, the Zooms, Peloton, which I freaking hate Peloton. I've talked about that before. A lot of these stocks got way too hot. That's number one. And now we're seeing the whole bear market. This is in depression status at this point due to people getting out of these stocks and flooding it into value stocks, flooding that money into value stocks. We obviously have the interest rate hike coming up. Tapering is occurring. The bond purchases coming to an end. All of that, quantitative easing, that coming back a bit, that's going to hurt stocks like Shopify in the short term, right? But I think this is actually getting very, very attractive in terms of a long-term play. And that is why patience when it comes to investing, guys, is so freaking important. I can't even tell you how important it is, because you can love a stock, but you might not love, or let's say you might love a company, but you might not love the valuation the stock's trading at. That is me with Shopify. I love Shopify, but I didn't like the valuation until now. Now it's getting to a point where I'm really liking it. So let me pull up my Safari tab very quickly so we can take a look at some metrics here. We'll take a look at the earnings presentation later in the video, so make sure you guys stick on throughout that. We'll take a look at the financial statements as well, talk some numbers. So right now, Shopify is an $83.87 billion company, and I think at the peak it was $150 billion, $200 billion, so it's come down a lot, a big chunk. The PE ratio right now for the trailing 12 months is roughly a 25, which is insane. We'll take a look at the growth here in a second. You'll know what I'm talking about. Their EPS for the past 12 months, roughly $27, exactly 27 bucks. So they are profitable. They're newly profitable. They were unprofitable for a couple of years heading into, I believe, the past year or two. Now they've been making some money. Now, if we take a look here at statistics, let's see what that price to sales ratio is looking like. Price to sales is still pretty high. Price to sales is at 25. So for me, guys, yes, stocks like Shopify, they deserve a premium, or you have to pay a premium to own them because they're quality companies with a lot of growth. So yes, price of sales is going to be higher, but maybe 25 is a little bit too hot. If this thing came under 20, maybe, that might be a bit better. But overall, as a initial position, I'm fine with it being a 25 price of sales for now, for me to take an initial position, right? A little nibble. And that's another thing. If you're investing for the long term, guys, don't go all in on a stock right away. Once you start seeing it in a nice buy zone, maybe go in a little bit, 10, 15%, a third of your goal position. And that's kind of what I'm looking to do here with Shopify. So 25 price of sales, no PEG growth ratio quite yet. Trailing 12 months P, like we said, it's about a 25, something like that. So let's go over here to CNBC now and take a look at these numbers so you guys can get an idea of how much this company grows. And you'll realize, okay, maybe that price of sales isn't that bad. And it really depends on what kind of investor you are. Obviously, if you're a strict value investor, you're probably laughing at me right now. But again, it depends on what kind of investor you are. So balance sheet. Balance sheet super important. Assets over liabilities. Right now, they have cash and short-term investments of around, what is this, about $8.1 billion. So they have a bit over $8 billion in cash and short-term investments. And these cash and short-term investments, this could be used to pay off debts, acquire whatever, merge with a company. This money could be used for a lot of different things, and that's good. What we want to see here now is current assets more than current liabilities, and in this case, it's disgustingly more, which is great. That means if, let's say Shopify wanted to liquidate these current assets, which they can do very quickly, for the most part, they have a lot of cash as well. Let's say if they wanted to pay off all of their debts due within 12 months, they can easily do that because they have $8 billion in cash, like I said, $8.7 billion in current assets, and their current liabilities are only $558 million, guys, million dollars. That is very low. We're talking $8 billion in cash, $550 million in current liabilities. That is a great balance sheet. And total liabilities, they have about, let's see here, about $1.6 billion, and total assets, they have almost $10 billion. So nice balance sheet on this particular company just from briefly looking at it. You guys can see here on the income statement their revenue growth the past couple of years. They did $870 million in 2017, $1.3 billion in 2018, almost $1.4 billion. In 2019, they did $2 billion, and now in 2020, they did almost $4 billion. So they're growing a lot. We're talking 60%, 80%. Sometimes over 100, almost 100%. It really depends on the year, and we'll take a look at that here in the earnings presentation in a second. So that's a quick little look at, their revenue growth, the balance sheet. Let's take a look at net income here. Net income used to calculate basic earnings per share. There it is, about $428 million on the bottom line. So we know that they're not really focusing on becoming the most profitable company right now. They're more focused on growth. But the fact that they did make about $430 million, not too bad when it comes to the net income on the bottom line. So let's take a look at this. This shows you strong and competitive market position when it comes to Shopify. Amazon's obviously first. They're dominating. I don't expect that to end anytime soon. So, be mindful, Shopify is probably going to be in second place for a while here, but at least they're in second place. Look at this. We have Shopify at 10.3% share of the U.S. retail e-commerce sales in 2021. That is very good. And then we have Walmart under that, eBay, Apple. The fact that Shopify is above Walmart, eBay, Apple, Home Depot, Target, Best Buy, that is very good. And I love Shopify because anybody could start a business. I used to have Shopify stores. If you want to start a Shopify store, you can literally do that. So it gives the small business owner out there a shot to open up a store and sell. If you have a brick and mortar store, you can sell online with Shopify. this is it's awesome. And I really don't see any other product as good as Shopify. Maybe I'm wrong, but it's a great product. And here we have strong revenue growth. You guys can see under here, it says when our merchants succeed, Shopify benefits. You guys can see the revenue growth between merchant solutions and subscription solutions over the past couple of years. And this is why potentially the stock is selling off aggressively after earnings. Maybe it's because they didn't grow as much as they thought they were going to grow, or maybe the overall revenue growth wasn't as great as expected. Look, they did 57% revenue growth in 2021. They did 86% in 2020. And the thing is, guys, if revenue growth is slowing, it could only be temporary, especially with companies that are growing very aggressively. One quarter they might do, or 1 year they might grow 50%. They might do 80% next year, 30% the year after. Hopefully it becomes more consistent, okay, like 15, 20, 30%. In due time, it will do that. But you have to realize there's going to be bad years off, and 57% growth is not a bad year. It's not. It's a great year. But there's going to be years where the growth isn't as good as maybe the next year, and then it could bounce back after that. And look at this. This is year-over-year monthly recurring revenue growth normalized on a higher basis, 41% compounded annual growth rate from 2018, or 2016 rather, to 2021. And you guys can see strength in year-over-year subscription solutions. This is monthly, the green's monthly recurring revenue from core. What is that? Peach colors, apps, themes, domains, Shopify Plus platform fee revenue. Light blue is monthly recurring revenue, Shopify Plus. So you guys can see how that's growing over the years. So I'm not going to go too deep into this, guys, because this video is probably already long. Yeah, it's about 11 minutes in right now. But you guys have to look deeper into this. It's, behind each stock, the ticker symbol, the price, there is a business. And what I always say, and this is not me that coined this, but a lot of big investors say it, price is what you pay, right? Value is what you get. If you were to buy Shopify at $1,600, admittedly, you're overpaying for it. It's, in hindsight, you're overpaying for it. Even back then, I was saying it's expensive, which is why I didn't buy it. And you have to realize and normalize when stocks are crashing, that is when you want to look into it to buy. Not the other way around. Not when Shopify is soaring, P ratios 200. That's not when you want to buy. You want to buy when everybody's selling it, it's getting beaten down to the ground. That's when you want to look for it and look for those entry points. So overall, Shopify, I'm looking to buy some. I didn't buy some yet. I'll let you guys know, as always. All you guys in my Patreon, you know that in advance. You get all my real-time buys, sells, call-outs, all that stuff. That's linked down below. And for you guys on YouTube, I'll probably talk about it more when I do buy it, because I am looking to initiate a position here. So if you all found value in the video, hit the like button, subscribe, drop me a comment, and make sure, like I said, join my Patreon. That's linked down below. And don't forget to get your 5 stocks from Moomoo. Literally free money, guys. Use my link down below. Deposit at least $100, and you guys could get up to 5 stocks, each of which could be valued valued up to $3,500. Link down below. Get your money, guys. I'll see you in the next video. Peace out.